Hello and welcome to Apollo Capital's new series titled How to DeFi. I'm Matthew Harcourt. I'm an analyst here at Apollo Capital and I've been working with Tim and Henrik since September of last year. From September to December, I was part-time with Tim and Henrik during my last semester of uni, and throughout 2021, I've been full-time. So the purpose of this new video series is to teach investors the basics of decentralized finance, to showcase the protocols that we are invested in, and to show the permissionless and non-custodial nature of decentralized finance, or DeFi. Now, the projects and protocols that we are going to be showcasing today are Aave and SushiSwap. Both Aave and SushiSwap are on both Ethereum Layer 1 and Polygon and the Polygon blockchain. The Polygon blockchain is a Layer 2 sidechain for Ethereum and has gained in popularity since these big DeFi protocols have been launching on the Polygon blockchain, and since Ethereum Layer 1 has been relatively congested and has caused high transaction fees. So for smaller users, the Polygon blockchain, as well as other blockchains, has become a really popular source, a really popular blockchain to use. So Aave, the liquidity protocol. So basically, Aave is the largest lending and borrowing protocol in decentralized finance. The other leader in this space is called Compound Finance. But today we're going to be showing Aave, which we are invested in the Apollo Capital Fund. Now we can see that the Ethereum Layer 1 market on the Aave protocol has a market size of $19.2 billion, so fairly large, and the Polygon market size is just over 4.3 billion. So we'll jump over to my dashboard, on the Polygon blockchain, Aave, where we can see that I have a debt position, or two debt positions, of dying USDT totaling $351 US, and I've got a deposit of wrapped Bitcoin there of $1.7 thousand US. Now, wrapped Bitcoin is an ERC20 version of Bitcoin. So how that works is you have it's a custodial solution. So there are various custodians who hold Bitcoin and can issue wrapped Bitcoin against that Bitcoin as an ERC in an ERC20 form. Now, an ERC20 is what you call a token that is on the Ethereum blockchain. So that is a way, wrapped Bitcoin as well as other solutions such as REN BTC are ways to bring the value of Bitcoin, which is obviously quite large, onto the Ethereum blockchain, and for that value to be used in DeFi. Now we can see that over here in the borrow information, my current position has a health factor of 3.61, and my borrowing power used is 29.62%. Now I'm actually going to deposit some additional funds onto Aave so that my lending position, once I show you how to borrow, is safer. So we'll go on to deposit, and we will select Aave since I have some Aave. Now Aave is the governance token for the Aave protocol, and you can stake your Aave and earn a percentage of protocol fees that come from users using the protocol. Now here we'll see we're using MetaMask. Now MetaMask is a leading wallet provider for DeFi. Very much recommend using MetaMask if you are going to take part in decentralized finance and use these protocols. Now we're going to put up the gas price to 5 just so the transaction goes through a bit quicker. Now we will be getting an interest rate on the assets that we provide. And so this interest rate on Aave is variable, and that is because users at any time, as is the permissionless nature of Aave and DeFi, users can deposit, withdraw, borrow, or repay at any time that they want, and all of those actions have an impact on the underlying exchange rate. So we can see that the APY for supplying wrapped Bitcoin is only 0.01%. That is because there is very small borrowing demand for wrapped Bitcoin in this market. But we can see that to borrow DAI and to borrow USDT, it will cost you around 3.9% per annum, which can obviously change. Now we can see that my borrowing power used has dropped from 29 to 22%, and the health factor has jumped up to 5.13%. And health factor, if you have a health factor of 1, you get liquidated. Now you don't want to get liquidated because, as well as losing the amount that you've borrowed, you also incur a 15% penalty. Now, you get liquidated by external parties, and they are incentivized to liquidate you to receive a portion of that 15% liquidation penalty. Now, if we jump onto details, we can see that the maximum loan to value that we can borrow straight away is 63.48%. So for every dollar of collateral that we have in Aave, we can borrow 63.48 cents. And the liquidation threshold, so that's when we get liquidated, is 71.74, but our current is only 13.97. So we've got quite a healthy position at the moment, but we are going to borrow some more USDT. Oh, no, so that we don't want to repay it, we want to borrow. So we'll jump on borrow tab up there, click USDT, and if we go on max, we can see that our health factor goes right down to 1.14. And if it goes down to 1, then we'll get liquidated. And how it would go down to 1 is if the value of our collateral goes down, which is obviously likely in such a volatile market like crypto. So we're not going to borrow 1.2 thousand. We're only going to borrow 300, which will bring our health factor down to 2.78. We'll grab the variable interest rate, which is variable for reasons that we just described before. And we'll make sure that we can speed this one up as well once MetaMask loads. So to transact on the Polygon blockchain, you're going to need the native asset Matic. Oh, sorry, just a bit laggy. Matic is the native asset for the Polygon blockchain, and you're going to need Matic in order to transact, to pay the miners and the validators to put your transactions through, just like you would have to pay Ethereum on the Ethereum layer 1 blockchain. But obviously Matic and Polygon is a lot cheaper. Now we'll jump back onto my dashboard, and we can see the borrowing power used has jumped up to 40.72%, and our loan to value ratio has also increased. So another important thing to point out with Aave, if you are going to take out a debt position, is that you need to have this ticked on as collateral. So yes, we can use both of those assets as collateral, and not all assets that you can deposit into Aave can be used as collateral. So for example, you can't actually use USDT as collateral, but you can supply it and you can earn an APY from the borrowing market, but you can't leverage that USDT to take out a bigger debt position. So that's about it from Aave. So the main risks there are your liquidation risk. Smart contract risk is on the lower end due to the fact that Aave and Compound and lending protocols like this have been around for a long time. They're battle tested, they've got quality teams, and they're some of the biggest names in DeFi. So the smart contract risk there is relatively low. You've just got to worry about getting liquidated because you don't want to be hit with that 15% penalty. So we're going to jump over to SushiSwap. SushiSwap is a decentralized exchange that uses an automated market maker to allow users to transact between different currencies or different crypto assets. So we can see that we're on the Polygon blockchain for SushiSwap at the moment, but we can see that they actually have launched on multiple blockchains. So there's 11 different blockchains there that you can use SushiSwap on. Ethereum and Polygon are the biggest markets because they are incentivized, but there's a few other ones where there are incentives and there's a reasonable market there. So what I mean by incentivized is if you jump over to farm, you can actually see the pools that are incentivized with rewards such as Matic and Sushi. So this brings up the APR that liquidity providers in those liquidity pools can earn. And that means there's going to be a higher total value locked, which means that the pools are going to be more liquid and you can get a better rate on transacting between those assets. So we're going to jump onto swap. And we are going to use some of that USDT that we just borrowed to swap it into Sushi. Because Sushi is another governance token that we hold in the ACF. And we really like Sushi as a decentralized exchange. Sushi started off as a fork of Uniswap, but it really has developed into a differentiated protocol. As you can see, SushiSwap is available on so many different blockchains. They're really becoming an inter-protocol beast, if you will, that spans across the whole DeFi ecosystem, rather than Uniswap, which really only exists majorly on ETH Layer 1 at the moment, and is going on to those ETH Layer 2 solutions such as Arbitrum and Optimism in the near term as well. So here we're just confirming the transaction in our wallet to transact between USDT and Sushi. And then we will have, once that confirms on the blockchain, we will have Sushi in our wallet. Now, throughout that whole process, we retained custody of our assets the whole time, and we did not have to give them away to a centralized intermediary in order to facilitate those transactions, and it was entirely permissionless. So I did not have to call up the Aave team and say, hey, can I get a loan? Or I didn't have to KYC with SushiSwap in order to be able to transact. So that I hope that was a good little introduction to DeFi. We showed you the largest lending protocol and one of the largest decentralized exchanges in DeFi in general, but also on the Polygon network. Now, Matic is the native asset of Polygon, and we also own that in the Apollo Capital Fund because we really like how the Polygon blockchain is pushing DeFi innovation forward beyond just Ethereum Layer 1, which is obviously being congested and fees are really high. So yeah, that's all for now. We'll see you on the next one, where we will either go into a little bit more depth with more complex protocols, or showcase other more basic protocols that are different to Sushi and Aave.